Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 8th, 2016. So Friday today, S&P 500 closed at all-time highs. This is bullish. Market breadth is confirming all-time highs, and many of the sectors, such as industrials, utilities, staples, real estate investment trusts, all hit all-time highs this week. Consumer discretionary are very close to all-time highs. Healthcare is outperforming. One concerning factor is that transports, they're still lagging behind the general market. However, the junk bonds hit 52-week highs as well, so this is all positive developments for the stocks. The interesting thing is that treasuries also hit all-time highs and investment grade bonds as well. We'll look at dollar with a possible bull flag that's been traced out. Oil broke support, I think. We'll look at natural gas, which is correcting within a bigger uptrend, and we'll also look at wheat, and you can trade that commodity as well. So let's start out with a weekly S&P 500 index, and this is going back a couple of years, and this is a close-only chart. So basically we closed at all-time highs. Today the close on Friday was at 21.29.90, and the previous close was here at 21.26.64. So breakout to all-time highs. This is a close above all-time highs. This is all very positive events. Now, just to put this in perspective, this is a 52-week lows. In fact, these are more than 52-week lows. These are 2-year plus lows. So this is a very powerful rally of the lows here, and quite unprecedented actually. So for now, I'm going to treat market as bullish and look for buying opportunities within a bigger uptrend. This is the S&P 500 ETF SPY with dividends. So this is a total return index, all-time highs, and this is a very good looking candle. This is a weekly chart. This is a very good looking candle, follow up to the last week's very strong candle. Basically the Brexit was completely negated with a big white candle. This could be like an outside reversal, bullish engulfing, and continuation to all-time highs. So basically we can expect all-time highs to continue, as this is going most likely to be a kind of like a short cover and rally. If you're shorting S&P 500, where would you put your stops? You would put your stops above this high. So what's happening now is that the stops, the shorts are being covered up here, and that means buying activity, and that means prices are rising as a result. This is a S&P 500 ETF SPY and a daily time frame. Showing this Friday's all-time highs. This is a total return index again. So basically this Brexit thing, basically this was a bear trap. So we had a break below support, this is support here, break below support, a close below support, a close below 200-day moving average, and then immediately we turn around and continued to all-time highs. So I pointed out when this Brexit was happening, I pointed out this big volume pattern. So I said that this could be one of two things. This could be either initiation or a climax, and clearly this was a climax, or selling climax. Further down below we have advanced decline line, and it is hitting all-time highs. So advanced decline line is confirming all-time highs. The cumulative volume or advanced decline volume line is lagging slightly, but it is coming close to all-time highs as well. The all-time highs are back there. I think the reason for that is because Apple is lagging somewhat, so volume is lagging slightly behind. This is New York Stock Exchange Composite on a daily time frame going back about a year and a half. And this chart, what I wanted to point out is this indicator here, which is new highs less new lows divided by total active symbols. and looks like we are making much more highs than we're making of the lows. So in other words, the highs are outpacing the lows by a significant percentage. Pointed out that if you're a very conservative investor, and this one of those indicators that could work for you. So let's say if this indicator drops below negative 10%, you simply stay out of the market, or you look for shorting opportunities. And then when this indicator goes into above 10%, this is 10%. You start looking for buying opportunities. So we certainly are there, and um, this certainly looks like a bullish, now looks bullish to me. Further down below, again, advanced decline lines. This is all-time highs, but advanced decline volume is still lagging behind, but not far off. As far as percentage of stocks above the 200-day moving average, we're well above the 60% mark, so we're in decent shape there as well. And the bullish percent index is also above the 60% mark, so we're in decent shape there as well. So some of the sectors I pointed out last week also hit all-time highs. So this is utilities, very strong move in utilities. All-time highs here just this week on Wednesday, and then we kind of corrected back down. It's a small sector of the S&P 500, about 2 to 3%, I think, but still, it is part of the market. Of course, one of the bigger reasons why utilities are hitting all-time highs is because of the strength in bonds. Real estate, also not a very big part of the S&P 500, but it is, nevertheless part of the financial sector, also at all-time highs. And just this Friday, also another all-time high. So this is quite a bullish chart to me. XLP, consumer staples, about 10% of the market. S&P 500 by market cap, all-time highs. Again, very strong chart. You'll ask, of course, that all of those three is the utilities, the REITs, and the consumer staples. They're defensive sectors. It is correct. However, one of the other sectors that hit 52-week highs and all-time highs this week is industrial sector. Industrial sector just hit, let me see, 57.33. This is a total return, by the way. This includes dividends. So we're above the 56.91. So this is all-time highs. Industrial sectors is certainly not a defensive sector. It includes many of the transportation stocks and, of course, things like industrial suppliers. So certainly looking very strong and bullish industrial chart right here. Another sector that is approaching all-time highs is the consumer discretionary, and this is as economically sensitive as probably going to get. The all-time highs are back here from December of last year, but we're very close to them, and also this very nice looking gap and the continuation higher. So this could be initiation gap, and we could continue higher from here. So, we got several sectors within the defensive sectors, but then also we have the offensive sectors are also gaining towards the all-time high or the 52-week highs. One other sector I wanted to highlight was the healthcare sector. Was one of the laggards really for most of the year. These are 52-week lows here, and then we really recovered strongly, and this move after Brexit was also very strong. We're not close to all-time highs yet, but it's still nevertheless quite a strong move for healthcare sector. So to summarize, I think the market S&P 500 is bullish. The stocks most likely are going to be making further all-time highs, and we'll be looking to capitalize it on looking for buying opportunities within the bigger uptrend. Now, one sector that kind of worries me is, of course, the transportation sector. So this is one of the worst looking charts out there. So these are several multi-year lows. a big rally together with the general market, and now we're kind of underperforming. So the transportation is certainly underperforming the general market, and this could be resolved, one of two ways: is that transportation sector catches up to the general market, or vice versa, the general market actually corrects back down and joins the transportation sector, which I still think that this could be, a downtrend, immediate downtrend. But I think, if we break above, maybe, I don't know, 8100 here on this chart, then I think we're going to be in an uptrend now. So junk bonds, high yield corporate bonds, ETF JNK, and also another one HYG. Very resilient. I pointed this out here back in April, May, and this was a strength in junk bonds bode well for the general market, and just on Friday today we hit 52-week highs. So correlation between the junk bonds and the general S&P 500 is quite high. It's usually in the positive territory. So which one is leading the other is hard to say, but it is good to see that they both are approaching and hitting 52-week highs. So again, I think that the general market is bullish, the junk bonds are bullish. So for now, it looks like we're going to keep pushing higher in the risk assets. Of course, at the same time that the stocks are hitting all-time highs, the TLT, the Treasury ETF, is also hitting all-time highs. By the way, this is a total return, so it includes the dividends. Really incredible move, very steep advance. We got a gap here, another gap here. So I think it's overextended, but as if you listen to my previous videos, I said that they are overextended. They just keep pushing higher. So eventually, I don't know when, the rally will peter out in bonds, and we will get corrective action. This advance is just way too steep. So if you have a position open, certainly keep it open. But I don't think I want to be opening any new positions up here. On the weekly time frame, we had a very interesting pattern. So I pointed out this what looked like a cup or a saucer pattern. The depth of this pattern is about 6.1%. We basically duplicated it on the upside. So this pattern is more or less complete. So it would not be a complete surprise if we get a corrective action. We're certainly overextended. I mean, if we count from here, this was a 12+% move from just May. So certainly a very strong move. Another deeper pattern here is a possible cup with handle, and if this is a breakout above the cup, above the lip of the cup, then we're already 6.2% there towards the 20% move, which is also entirely possible. However, this is a very almost a doomsday scenario. If bonds rally to that extent, it's possible that stocks would be under severe pressure. The more diversified bonds, AGG, this includes all kinds of United States bonds, also all-time highs. Again, very steep advance. Personally, I would not chase it up here. We do have a position open, but I opened it way back here last year, so we're just kind of riding it up. So I think we need to correct really as far as the bonds are concerned. This is just very overextended, I guess is the word. On the weekly time frame, I pointed out this pattern here. Depth of this pattern was 3.4%. We are already there and then some, so we're well beyond that pattern. Also very steep advance. I mean, if you count from here or from here, this is a very steep advance and a long-term one. So I think the correction is coming in bonds. when it's gonna happen, I have no idea, but I think a correction is definitely overdue. Right, switching gears here, this is US dollar cash settle daily time frame. This is a Brexit here, and dollar gained strongly, and now it kind of corrected in a possible flag pattern. So if this is a flag pattern, then we can expect, if we close above 96.865, we could expect a move to probably around 98.60 or so, possibly higher. As far as other currencies, euro is certainly under pressure, and of course the British pound is hitting 30+ year lows. The opposite is happening in the Japanese yen. It is rallying against other currencies, but as I pointed out in the previous videos, I think a very expensive yen is counterproductive for the Japanese economy, so it's entirely possible that we will see intervention from Bank of Japan on top of the quantitative easing that they are already providing. This is a weekly time frame for the same US dollar. This is a bullish looking chart to me. We had a breakout here in 2014 and basically a very big consolidation for the past couple of years. So far, we're hitting this trend line that I drew in from these two peaks here, from 2015-2016 peaks, and a breakout above this trend line would certainly be bullish, and it possibly could open the door to break out above this level. If we do break out above 100, then this cup could be duplicated on the upside, and this is about 9% depth. Same thing here as far as the other three major currencies. The euro is kind of flirting with going lower, and this is a 52-week lows here, so we could see more weakness in the euro and of course the British pound as well. And as I said before, the Japanese yen could reverse, especially if the Bank of Japan decides to intervene in the markets. This is oil, West Texas Intermediate continuous contract. This is a daily time frame. Looks like we got a breakdown below the June lows. This is a close, actually two consecutive closes below the June lows. So this looks like a good looking support break. We'll see where it goes. It's possible we're going to see some back and forth, but for now this looks like a genuine support break. On a weekly time frame, it's a little more clear, and actually I highly recommend sometimes you zoom out and see like the bigger picture from the a bigger time frame. So this is a weekly time frame, and I kept pointing out this level here. If you see some of my previous videos, we would tag that level here, and this level, why there is resistance there is because there is a lot of things happening at that level. So first of all, there is these three peaks from 2015, early 2015, and then there is this peak from October of 2015. For now, this looks like a failed breakout, and looks like we were rejected at that price, and this looks like a picture-perfect rejection at that price with a breakdown follow-through. We'll see where that takes us, but certainly does not look good. And I already am hearing about extra oil rigs coming into production, and it makes perfect sense because the price went up, and now the companies say, okay, let's sell some more oil. So what happens is there's more oil on the market, and of course the price of oil is starting to come under pressure. Now there's a lot of talk about oil correlating highly to the general S&P 500 market. I think it's a spurious correlation, and you can see that lately it's been very positive. So in other words, when the S&P 500 moves up, oil moves up as well. But I think this is a spurious correlation, and actually when the oil was at about $100 here. People were saying, well, wouldn't this oil being so expensive weigh on the general market? And let's just zoom out. I wanted to show you what I mean. So let's go 35 years out. So this is a correlation coefficient with S&P 500, and this is a weekly time frame, so it's smoothed over 20 weeks. You can see it's all over the place. Sometimes it's positive, sometimes it's negative. Here in 2008, lately it's been somewhat positive, more positive, but I think this is a spurious correlation because here, for the most part, is basically all over the place. So I wouldn't necessarily look at oil for guidance where the S&P 500 will go. So one commodity is that is hitting 52-week highs is natural gas, and I pointed out this level here at $2.50 in some of my previous videos, and we had a clear breakout above this level and a continuation higher. In fact, we hit 52-week highs just recently, and then we have a sort of a correction right now. Now, this is a very bullish looking chart, so basically any pullback within this bigger uptrend would be a I'm looking for a pullback within the bigger uptrend to go get long and do trades on the long side. This is natural gas, continuous contract in a weekly time frame, and here's that same $2.50 level. It's pretty obvious resistance level, and the reason is because there was a lot of things happening at that level. We had several touches here, and then a support break, rejection at this support level, and then finally a breakout. So for now, this looks very bullish. Most likely, we're going to see some consolidation, possibly a throwback to the resistance level, which now is going to possibly act as support. And then we'll see where it goes from there. But I think this is a bullish-looking chart, and I think we will most likely see higher prices for natural gas ahead. So agricultural commodities are some of the agricultural commodities are acting pretty well. One that was not, of course, is wheat. We had this just non-stop selling for better part of this month. And then this could be like a hammer candlestick here, and then a continuation rally higher, especially on Friday here. This chart does not really inspire confidence as it stands right now because, for example, this is a 50-day and a 200-day moving average. You can see the 50-day is below the 200-day. So just based on that, you can already say that this is most likely a bearish chart. However, if you go to weekly time frame, this could be a slightly better picture. Now, clearly there's a downtrend, and this is a multi-year downtrend. Within it, there were several powerful rallies that were basically all sold off. In fact, recent rally also got sold off rather viciously. In fact, this is a close below 2016 low, so this is a not very good looking candle at all. But this week this could be a weekly hammer candlestick. So this is a kind of low risk entry basically, and if you buy here, your stop would be just below the recent low, so your risk is really quite limited to the downside. But the upside, well, it's possible we might get a rally to maybe 460 here, possibly higher. I don't know. There's an alternative scenario where we just fall out of bed and continue lower. This is trading commodities is even more risky than trading stocks because they're quite volatile, even more so than the stocks themselves. Anyways, that's it for this week's recap. Thanks for watching, and if you have any questions, please don't hesitate to send them in, and please stay tuned to how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.